What a week, what a crazy week. And the best way to demonstrate the week was the thumbnail that I put on for this video. It's like everyone during the week said, oh, take away all my stocks for me. That's probably how you felt. Well, thank Jerome Powell for that. He was able to say the same thing for maybe the fifth or sixth time, but this time he really, really meant it. Are you ready for a weekly summary where we cover all the news, all the headlines, everything that happened, and I'm even going to show you something very, very interesting regarding the weeks ahead. Are you ready for it? Let's go. Hello everyone and welcome back to the channel. If you're new, hi, I'm Micah Stocks. Welcome. And if you're a repeating viewer, thank you very much for putting your trust in this educational and entertainment video. I remind everyone this is not financial advice. Anything or everything that you see on this video. And yes, everything exists on our YouTube channel where we have over 2,000 subscribers. 42 videos. We're growing almost every week. We have a weekly summary with, I made them so I can say it, amazing thumbnails. The best you've ever seen. Let's start analyzing the week. So the week wasn't a good week. All the major averages were down for the week. The NASDAQ down 3.3%. The Russell down 3.78%. The S&P down almost 3%. And the Dow Jones down 1.9%. This does not mean that from the beginning of the week we are red. We're still not. All the major averages are still green for the year. The Russell, the Dow, the S&P, and the NASDAQ, all of them green for the year. On the other hand, the crypto, it's not on the other hand, actually, it's on the same hand. Crypto didn't have a good week either. Bitcoin is down 0.5%. ETH is down 2.6%. And year-to-date, Bitcoin is up 60%. Ether is up 32%. When we look at the major sectors or major indices, you can see healthcare outperforming, I want to say. It's only down 1% versus consumer discretionary, which is down 6%. We are now at extreme oversold measurements by the Bespoke Trend Analyzer. You can see all the major averages. Extreme oversold, which usually identifies some kind of local bottom. It doesn't mean that we're going to go up from here, but it does mean that this usually represent a better entry point or a better place where you can increase your stock holdings versus when we are at extreme overbought. When we look at the annual trend of a 4-year presidential cycle, as you can see, we are still in that sloppy area before the run-up for the last year of the presidency. And also, when you split it into the different quarters, we are now ending the worst quarter of this year, which means that next quarter we are supposed to see a gain on the major averages. When we look at the fear and greed, we are at the count of 36 at the CNN fear and greed. Most of the people, which are not professionals, which don't understand how the cycle works, prefer buying it when everything is extreme greed. This is not the right entry point. The right entry point is when everyone is fearing the market, when there is blood on the street, like Rothschild used to say. It's a lot more difficult because you don't know if you found the bottom, but usually it's a better entry point. Let's dive in. So we had the FOMC meeting. We had Jerome Powell summarize the same summary that you've heard in the past. So why did the market behave the way it did? Well, the reason is the dot plot. The dot plot is every Fed member marks with a Sharpie where they believe the Fed funds rate will be at the end of that year. And you can see that, first of all, most of them at least forecasted that by the end of 2023, we are going to see at least one more Fed rate hike. That was in the cards. I don't think that was a big surprise. The big surprise was around here. When the market expected that probably beginning of the year, or Q1 2024, we will start seeing rates coming down. Fed members actually don't believe that the rates are going to come down rapidly. They expect it to be over 5%, which means that higher for longer narrative is still in the cards. And when that's in the cards, everyone needed to update their models. When they updated the models, they saw everything is expensive. Sell, sell, sell. Basically, that's the idea. Let's continue. What are we seeing but beyond the Fed, let's say the Fed talk? We are seeing a consumer that might be strong but is eating their savings and also taking more credit. Credit card losses are rising at the fastest pace since the great financial crisis, which means that we are putting a lot more stress on the consumer, at least in a year that is a presidential election year, which usually is not a good year to play around with these kinds of things. And that's probably something that everyone needs to consider in the grand scheme of things. Also, we have a strike. The UAW is now going into their second week, actually their third week. They're going into a strike where Ford, GM, and Stellantis are at the center. Thousands of workers are on strike. To top it off and to take sides on the strike, President Biden on Tuesday is going to come to Michigan to join the picket line. I can't tell you anything beyond that. At least now Ford, GM, and Stellantis feel like Tesla when the president doesn't like you. Tinder offers a $500 a month subscription for VIP search. This is $6,000 a year, as you can probably multiply. Ticker is Match, MTCH. McDonald's is going to raise their royalty fees for new franchise restaurants. They haven't done it in 30 years. They're going to raise it from 4% to 5%. Someone said inflation. Yep. And this is Anne-Marie Horton, AMH from Bloomberg, taking a picture of the lines. This is not the picket lines. These are people that are really, really, really excited to buy their new iPhone 15, 15 Pro, 15 Pro Max, any 15. And this is yours truly in the Garden State Mall here in New Jersey, taking pictures of the line. I can tell you from speaking to the Apple employees, they said they have never seen a line in the last few years so long with people that have pre-ordered. So maybe iPhone 15 is a huge success. At least I got mine in the mail. I didn't need to wait in line. And Microsoft launches September 26th, their AI Copilot. Copilot means that you will be able to have the chatbot do a lot of things for you for $30 per month. Will they see huge success? If yes, it's going to be the biggest, let's say, the biggest monetization gain they got from Office. Might be very, very interesting to see. And NIO, the EV, the Chinese EV, ticker NIO, launches a new phone. Why would they launch a new phone? I have no idea, but people like to continue with the same brand to different offerings. Google and Broadcom. So the information came out with a piece saying that Google is going to leave Broadcom as the chip supplier by 2027. Of course, it was already... Google already clarified that that's not the case and blah, blah, blah. But Broadcom, of course, saw their share coming down and then coming up when the retracement came. But everyone is looking at Broadcom. And I think Broadcom needs to look at all these behemoths, Google, Apple, and others, and ask themselves, do you really want to be dependent on them? Right now, every time there's a hiccup, Broadcom stocks hits it in the head. And this is Jamie Dimon that keeps... warning everyone that the Fed might hike more and more and more because inflation is sticky. If you believe him, you can write down in the comments below. Tell me, yes, I believe Jamie Dimon. Apple and Goldman Sachs apparently wanted to launch a stock trading feature on the iPhones, but the stock went down. The market went down, and when the market went down, that was last year, no one wants to trade stocks. So they stopped, but they might do that. Would you use your iPhone to trade stocks not in a... let's say a specific broker app, but actually on the native app of Apple? Write me down in the comments if you would. And Savita Subramanian, the one day on Wednesday or Tuesday, she came out and said, I'm raising my S&P target. And then the market fell. She's raising her S&P end of year target to 4,600. Savita from Bank of America. Very knowledgeable about what's going on in the market from a quant perspective and from an analyzing the market. Interesting. 4,600 is very good. And this is Microsoft going to launch the new Xbox in 2028, the refresh 2024. GDP Now, Atlanta Fed 4.9. No recession in the horizon, at least not in that data. It needs to be 2 consecutive quarters of negative growth. We are now at positive, very strong positive growth. Google connects Bard to all the Google suite, and now you can ask Bard, check my email for information related to my upcoming flights, and Bard was supposed to tell you what's going on. It's basically the equivalent to Copilot, Microsoft Copilot. And Tesla, a day to remember, the 5 millionth car was produced. Crazy. OpenAI, ChatGPT, Morgan Stanley. Everyone now at Morgan Stanley can use it, all the financial advisors, and get a lot more information faster, more focused, and that shows a level of confidence in the technology and in the platform. And if you're investing in shipping stocks, Zim is an example, which is very common across these kinds of stocks, where, well, they keep going down because shipping rates are sinking. So shipping is, in 2020, because of the lockdowns, they were very, very lucrative with huge dividends. But since 2022, all those dividends went down the toilet, and now everyone is underwater, just like the aquarium here behind me. What is going to happen to us next week? Well, pretty much on the calendar, the biggest thing that everyone is looking for is the PCE on Thursday. Why? Because that is the Fed's preferred inflation gauge. That's going to happen 8:30 a.m. on a Thursday. We have several companies reporting. We have Costco, we have Paychex, we have Micron, Accenture, and Nike. We're going to hear about the consumer, both from Costco and Nike. We're going to hear about the chips from Micron. We're going to hear about Paychex from Paychex, Stagadush. And we are going to go on a cruise with Carnival and hear how are the orders. Are people still spending like there's no tomorrow? And this is the S&P 500. What you can see here on the lines are gaps that the S&P 500 has. Why are they relevant? Because we are currently, as of the 26th of July, in a downward trend in the S&P. We are in an upward long-term trend, but in the short term, we are in a downward trend. When we look down, we're looking for gaps that we might fill. The next gap might be at 4,200, between 4,240 and 4,230. This does not mean that we are going to a crash. All it means is that from a technical perspective, we might close that gap as well. Now, how does that not contradict what I said in the beginning, that we are basically oversold and we might see, let's say, a movement up? Well, as you can see here on the charts, and these are Japanese candlesticks. If you want, I can change it to charts so you'll be able to see. The market knows how to go up and then correct itself, go up and then correct itself, and closing the gap might not be that dramatic because it's still in the upward channel that you can see here. And from a technical perspective, nothing yet has broken. Does that mean that we will go from here to the moon and we can go see the movie Dumb Money that will talk about all the meme stock phenomena that happened in 2020? Probably not. But it does say that we might get some oxygen, some green on the screen during the weeks ahead. I'm Micah Stocks. If you enjoyed everything, smash that like button. You can share this video. It's fine to share it with your friends, with your on your social media. Tell everyone that you love seeing the weekly summaries so they will join in the week ahead. Thank you very much for watching. See you next week. Bye-bye.